You join a hedge fund, it's like your dream come true. You're like, finally, I'm here. And then you're like listening to a boss, you're like, oh, wow, apparently this is not the future.
There's a large cohort of crypto native users that simply do not invest in real estate.
Crypto industry is very cyclical. Capital, optimism, profit. Then when it corrects, the correction is usually very steep, right? But it really burns a lot of people in. This is really not for 99% of the people in the world. This volatility is too much. Volatility comes opportunity, right?
Do you need to diversify, right? Yeah, you can go across different asset classes.
You're tokenizing real world assets, right?
Trying to bring the best of both worlds and offering it as a less volatile investment product.
I checked your platform. It targets the right people, but for many years, the RWA crowd was just talking to the wrong end users.
But it's not only about price accessibility, it's also about, is this even appealing? Is this something I consider? How do we make this the optimal time investment product in the future? Lots of work to do there for sure.
But then you pitch it to crypto crowd, but crypto crowd were like, but we are chasing meme coins. Like, how is it? It's not the fit, right?
It gives me 13x in 2 days.
Exactly.
Yeah.
Exactly. When you're building something, it's just problems, it's just challenges. So no, definitely don't do that. We tried that, this doesn't work. We will never buy your garbage tokens, you know? And this is not an innovation. There is something bigger coming.
Welcome to Block by Block. Today we have Anton Golub with us, founding member of RWA Labs, Chief Business Officer of Freedex, and probably a lot of other secret special projects and companies in the background that maybe we'll learn about today, a few of them, hopefully. Thanks for being with us.
Sebastian, thank you very much for welcoming me, and great to be on the block. On the Block by Block, yeah.
Yeah, our pleasure, our pleasure. We have the pleasure of meeting a lot of incredible people on Block by Block, and generally, I would say, in the ecosystem that we both find ourselves in, sort of Web3, blockchain, etc. And for us at the Tribe, but obviously the intersection of into real estate, you are absolutely on the top of that list, right? Your face, your name, your voice is already everywhere in our ecosystem because you've been in this space way longer than most people, including myself, right? So it's a pleasure and an honor to be able to sit with you today and just have a conversation. Most of the people that we have on here so far, they are largely engaged in one company, right? And they have a sort of a singular mission that the journey that they're on. You are involved in multiple, right? As far as I'm aware, probably more than I already know about, right? Before we speak about any of those, I want to start somewhere else, right? I want to start with life.
Yeah.
Because business is part of life, but it's not all of life, right?
Sure.
What does, for you, balancing running multiple projects, multiple businesses at the same time look like in life? Like, how do you do it?
Yeah. So first, thank you very much for the praises. You were saying it, you know, I felt it was a good feeling, felt flattered. But also, as you were saying, you know, involved in multiple things, I was like thinking, wow, it comes with its own challenges as well, you know? So, I mean, maybe to like first say, why would you do it? Or let's say why I do it. And to be like very honest, like in the end, it's all about the people who are involved in these initiatives. It's because you have a great collaboration, great interaction, hopefully a great outcome out of that, and great, happy, satisfied clients, partners, however you want to call it. So that's actually why you do it, right? And I think everybody like who is now listening this, they could kind of say, they could relate to it. They would say, yeah, if I don't really like what I'm doing, I will not do twice or 3 times that, right? Or how much is their capacity, right? So for me, it's about the people. Like, why am I engaged? Then obviously there's usually, or there it's always actually an interest. So there's my personal affinity to be involved in something where I think, where I see a long-term future in it or long-term potential. You know, as you were kind of giving the introduction, now to say it, it's actually not that easy, let's say it like that, because it's just a lot of work in the end. Like, there's nothing mind-blowing to it. I don't have like a big secret here, but it's just like a...
Sorry, people.
Sorry, people.
We're waiting for the big reveal here.
Yeah, but it's just a lot of work. But, you know, to make it manageable, you know, I deal with it by organizing my work time, let's say it like that, right? Sometimes it means I have to work a bit more than usual, right? Than I would kind of think it should be normal, let's say it like that. But that's basically what it is. You really have to organize yourself, and because in the end you're responsible to your partners, to your co-founders, like your team, your clients. You're responsible to them. It's all about this organization. I learned that over time. I don't think I like to think I'm a bit more on the artistic side, but it's just my thinking. But over time, like, I mean, you and I have been working for a long time. Like, you learn how to learn how to work, and you learn how to organize yourself. I was thinking as you were saying this, let me say something amazing for the beginning of the podcast. And I was like, nah, it's just work, and it's like, yeah, work. Yeah.
I think that is amazing, right? The unfiltered truth, if you will. Yeah. There's not, in my view, not enough open conversations about the difficult, ugly side of entrepreneurship, of operating businesses, of the sacrifices that come with it, right? And there are plenty of them. There's a lot of media exposure specifically, I would say, to the great successes, right? The unicorns, this and that. And it should remain. It should be praised and it should be celebrated. But when you're thinking about, certainly as a first-time founder or a first-time sort of early stage, even if you're an employee coming in to co-operate and co-build, it's very different to walking into a large-scale established business where there are systems, processes, layers of people. And I think, so the answer is amazing because it's your experience. Like, that's what we want, and that's what this is all about. You touched on something that is extremely close to heart and core to Tribe, because the clue is in the name, right? Tribe. It's about people. It's about community. And for us, every decision we try to make is with the people in mind as well as the business in mind, right? Yeah. You set out to start RWA Labs, I think about 10 months ago, something like that. Is that correct? With Irina and Juliet.
Yes.
Why those two wonderful humans?
So first, just to describe those two very wonderful humans. So Irina Hiver is, I think, like a lot of people know her as one of the leading lawyers in this digital asset.
She might be the only one who beats your brand exposure.
It's a never-ending, competition. Who is at least on the who is more active, on this like public matters, So Irina Hiver, first of all, a great friend. We know each other for a long, long time. One of the leading lawyers. Really, I mean, an amazing person. Great at execution, great at driving things. A pioneer. Did so many work here in the country, in the region, but globally on the legal side. And Juliet, she runs one of the leading VCs here in the region, in the country, New Trap Capital. Yeah. And also, really, I know her a little bit less than Irina, but also know her for a really long time. And, again, an amazing person, right? So it's basically, if I recall correctly, it was actually kind of Irina's idea. I'm not just reflecting now. It was Irina's idea, kind of saying, hey, we all three of us kind of like this RWA space, so tokenized real world assets. We like this space. We're very passionate about it. Also, we kind of identified there's a demand for people who want to enter into this space and need support. Okay, you're an advanced company, like you're really at the cutting edge, or bleeding edge of the industry. But a lot of other companies are, you are really at the forefront. But a lot of other companies, they want to learn what's tokenization. Maybe they want to start slow. They need a lot of education. They need a lot of hand-holding. And we identified kind of there's a demand there. So why don't we actually try to fill that gap, right? It actually was very simple, like the reason why we did it. We wanted to focus RWA Labs on the country and the region. So we are a UAE-based team, UAE focused, but obviously operating wider than that, global, let's say like that, where possible. And that was kind of the reason. So great people coming together, kind of feeling or thinking there's a demand for it, and objectively there is. We kind of know it. Now we know it, that there is demand. And we got together and we did some amazing things together, supporting some really leading companies on tokenization. Also, I mean, that's where kind of we had a contact as well. We organized RWA Summit, which was kind of like in this vacuum where Token 2049 was not happening because of the circumstances in the region.
Thanks for stepping up, by the way.
Yeah,
it was amazing.
Yeah, again, Irina was saying, we're doing it, Juliet, and we're like, well, it seems like we're doing it. So we organized our RWA Summit, which was the goal was to bring leading players in the RWA space together to talk, meet, discuss, collaborate, and so on. So this is kind of a little bit like how it came together. And RWA Labs has been a great experience, to be honest. Like, I really like it. All three of us, I mean, there's more people behind in the team who does a lot of the work as well, but kind of at the forefront publicly is myself, Irina, and Juliet. And I think we're a great team together. It's a pleasure to work with them. And it's also amazing to be surrounded by tough ladies who keep on pushing, So I don't know how your team is, but
let's not talk about that. That's a weak point at Triumph. Yeah. So we will take your expertise. How did you manage to figure that out? But takeaway for us, we need to. We're all male, unfortunately, today. Not by design, by it just is what it is.
Yeah.
But it's except. The next guest I will have on this podcast that I will have will be a wonderful human, a lady. She's part of the tribe, but not as operationally involved per se. I'll leave that one. It will be an unveiling.
I think everybody watching this is already hyped up for the next episode. Very well played. Good. Strong. Strong.
So earlier you mentioned something else which I want to put a little bit on. That is. Some days there's a lot more work. Some days there's a little bit less. I personally find that's often a choice you have to make. Like, you have to make that decision when you don't have a boss that tells you go home, or I need you till 9 p.m. today, or can you work Saturday, whatever. What I'm saying is it's like, where do you draw the line between work and life? And how do you do it, right? When do you decide, okay, enough. I need to go home and be with family, friends, go to the gym, do something different, right? How do you go about doing that?
Yeah. So I'll maybe actually emphasize, like, when do I usually have more work? And then I will kind of try to explain, like, how do I manage it?
When Irina calls.
Actually, you actually make a great point. Usually in the team, and this as a leader, right? Other people depend on you. And then when there is certain work that needs to be done, is because the rest of the team is depending on you. And they're kind of giving you a deadline where on what day or time they need your support, right? Mm-hmm. So, more work then means actually that more of the team members are kind of dependent on me, right? And I don't want to let them down. I want to support them, and I want to be a good team member, right? And then I have to do more work to satisfy those needs, right? Actually, so that's actually like why I have more work. Right. But also I'm very then honest, because you say, okay, where do you draw the line? For me personally, it's like, I'm just very realistic. Like, can I satisfy demands of the team in the time that we agreed? And if the answer is then yes, okay, then I do it. Maybe it's a bit more work. But if the answer is no, because I also need to rest, I need to spend time with my family and friends, then, I communicate transparently to my team and say, hey, I know we agreed on deadline for Thursday, it's Friday, but it's not happening. So I need to move that, and is it fine for you that we do it on Monday or Tuesday, right? And then they need to adapt, right? Because I think you make a great point, because otherwise, we are, you are a leader, you're an entrepreneur, you have an entrepreneurial spirit. And, if you talk about work, then you can work the whole day, and because you want to satisfy all of the demands from your team, and not let them down. And then you will work, every day, and you will never see your family, never see your friends, and maybe it will impact you badly, health-wise, mentally. And that's why I think when you ask me, like, when do I draw the line, it's where I realize I'm not able to do it in line with the expectations. I have to adapt, I have to move it, and I tell honestly the team, hey, and likewise, vice versa, the team tells me, hey, Anton, I know expected something until this day, it's just not happening because of whatever reason, let's adapt, right? That's basically how I draw the line. I'm just very honest with first my team, but also with myself, and I say, yeah, I need to go home and rest a little bit.
Fair enough.
I don't know how you see it, how you're driving it. Yeah,
I agree. I think it comes with experience and time, and perhaps to some degree age, because typically with age comes a higher degree of self-confidence and the ability to say no, right? It's quite, I found it when I was mid-20s to say no to myself, to figure out when enough is enough, right?
Yep.
Listening to your body physically, mentally, all of these things, they all play a part, right? Signals, internal and external signals. and actually listening to them and then taking an action on the back of them. It was significantly harder, I would say, in sort of in the 20s than I'm in my mid 30s today.
When you said mid-20s, I was like, what do you mean? I thought you are now mid-20s.
No, that's good. Thank you. I appreciate that. So yeah, I would say similar. And I do agree with this whole accountability sort of concept that you spoke about, right? When it's about Sebastian reorganizing his own work to satisfy his own work streams, it's a different story. But when someone else's work stream dependent on me or whatever that might be, it changes the game for sure. And that's definitely where more unreasonable work hours tends to kick in. So I'm very similar like that. I want to switch gears a little bit. Thank you very much for the openness and the honesty and transparency. One thing that's quite unique about you is the duration that you have spent in our ecosystem, right? In this industry. Because Web3 blockchain as an industry is very young. Like it's a really young industry. But it's today, certainly if you combine blockchain and AI, it's omnipresent, right? It's everywhere around us in life professionally and privately. Some of it we are highly conscious and aware about, right? We see it, we interact with it. But a lot of it, we're not aware about as consumers, right? It just sits in the background and does what it's meant to do, which is a great thing. I think that's maybe that's a whole other podcast, like speaking about how to build products and making sure that we, strip out the complexities of crypto products and so on and so forth. But with all this experience that you bring in, right? And that includes professional, but also educational specific experience, which is quite unique. How do you think that changes the way you look at what you do day to day compared to someone who doesn't have as much experience, right? You've seen the ups and the downs and maybe you can see patterns. So I'm curious to hear, do you think you think differently basically to a newborn operator in Web3?
Yeah. So I think you said one very important, you kind of flagged it actually at the end, that unlike many other industries, crypto industry is very cyclical. And these cycles are actually really strong, let's say like that, right? In a sense that you have this run up, everybody's very excited. There's a lot of capital, optimism, profits, revenues, excitement, right? And then when it kind of peaks for whatever reason, then when it corrects, the correction is usually very steep, right? And now you can say, well, this is as an industry, but you can just look at the prices and kind of relate to that. If you just look at Bitcoin, you say it goes up a lot and then it goes down 50%, right? There is not, I actually don't know of any other kind of industry or asset class that has this kind of 4 or 5 year cycles where it's so volatile, right? And one thing that I can tell you is that I kind of got adapted to it. Even I just to tell you why I'm saying that, because I had a very interesting conversation a few days ago with a friend of mine. I told him, yeah, this bear market is not so bad, And he was telling him no, it's very bad. You don't get it, or you're not maybe at the forefront of that, understanding how bad it is, or maybe my anchor is different. I kind of said, it's not that bad. He was like, no, actually it's really, really bad. If you look at the industry or look how much the transaction volume has gone down, activity has gone down, venture investments have gone down, prices have gone down. And then he even tells me, no, it's actually really, really rough out there, right? So that's also a reminder for me, because it was a close friend who kind of told me, hey, wake up. It's actually not that simple. But it's also made me think that maybe I have adapted, or it is just used for me because this is my fourth cycle, right?
Yeah. But you're normal.
Yeah, this kind of of course, we crash 50% because what else to expect, So maybe even more in the last cycle. So I think that's the first thing that I would say, is that I think that I have adapted, but maybe that's not a good thing actually in the end. But on the other side, I also understand that it actually can, this volatility is not attractive for many people actually. So if you reflect, a lot of other industry, tech industry, deep tech, AI, they're not so volatile. They're maybe now even maybe more exciting, or there's more upside to it, right? But this volatility, what I have seen over years, it burns people really a lot. And it means these burns people are people who kind of come close to Web3, and then they experience this volatility, and then they say, this is really not for me. And I would say maybe this is really not for 99% of the people in the world. This volatility is too much, right? But then I think, you as with an entrepreneurial background, you can say, well, with volatility comes opportunity, right? So if you can navigate that, and especially if you enter at the right time, there's really a lot of upside and a lot of reward to it. And that's how I would say, like, how I would balance it, like, in my mind. But it really burns a lot of people. And this is something what I want to say, like, to our industry, like, this, we burn a lot of people and ourselves as well, because you cannot be in this industry. I cannot imagine that I will be in this industry for 30 years and just riding this up and down and say, yeah, it's fine, again, another 30% drawdown, it's fine. So I don't know how you see it. I mean, because also I think you're in the RWA space, but more on the real estate side, and real estate is always perceived very stable.
Yeah.
So
it's like the opposite.
The opposite. So that's why I wanted to kind of hear how you see it, or how you see it from your tribe, from your clients, from your team. But I think, like, it's crypto industry is rough. Digital asset industry is rough.
Yeah, for sure. On the point, like, it's almost the exact opposite, and not only in the way it's perceived, but actually in the way it behaves, right? It's quite an interesting, conceptually quite an interesting thing, because we're looking to effectively merge the two in a sense, right? We're trying to bring the best of both worlds and create something in the middle, which is also partially why it's so difficult, right? The ecosystems behave completely differently. They think differently. The way I think about this is this, right? There is a sub-segment of crypto which is more stable, and the clue's in the name, stable coins, yielding stable coins.
Even those.
Yeah, which are, still volatile, but I think they play a role from an investor's perspective in the ecosystem, where I want a lower amount of volatility exposure on chain. The alternatives today are not that many, right? And yielding stables is one of those alternatives where I can park X amount of capital for Y period of time and, basically drive that yield, right? I think that's the role that real estate can play in the world of digital assets, right? Ultimately, sound financial, I guess, logic, if you will, is that you need to diversify, right? Yeah, you can put across different asset classes, but if you're gambling everything on crypto one without giving a specific, we don't do free brand placements.
No.
That's why for me it's very exciting, but it also comes with a big challenge, which is, without pulling out the data, and we have obviously looked at some of this data, there's a large cohort of, say, cryptogen or crypto native users, certainly I would say in the younger brackets, that simply do not invest in real estate, right? It's not an asset class that they have ever considered looking at, which in itself, it's a challenge we want to try and work towards overcoming, right? That accessibility, but it's not only about price accessibility. I think the dialogue gets stuck in that price accessibility conversation. It's also about, is this even appealing? Is this something I consider, right? A lot of investments are functionally invisible to various investor types, right? If you're your average XYZ person at 72, you might understand traditional stock market equities and so on very well, because you did that throughout a large duration of your life. But the idea of buying any crypto on an exchange, on a crypto exchange, might be so far removed in thought that you never even get to take the action, right? Even though you may be able to do it, functionally you figure it out, you just don't think about that as an investment opportunity. So what I'm saying is that bringing real estate on chain and offering it as a less volatile investment product will also have to come with quite a lot of educational efforts within the wider ecosystem. And this is not only real estate. I think this is true for a lot of the RWAs, right? Because they all behave differently than your traditional. But then it's true the other way around as well. Like, as we start converging the world of TradFi and DeFi, if you will, and we're bringing TradFi investors on these sort of like, I guess, into these ecosystems where you can now have exposure to traditional instruments, crypto, RWAs, we have to make sure that they are comfortable and that they understand all of those different investment opportunities or financial instruments for it to actually come to its like greatest fruition, right? Like, how do we make this the optimal time investment product in the future? Lots of work to do there for sure, but that's why we're here. So your background, there's a lot of experience specifically in exchanges, right? Again, similar to the early comment, and you bring a world or a wealth of experience that many could only dream of, quite frankly, right? With this in mind, so when you think about building and running an exchange today, I'm talking about crypto, not like the equities and whatnot. As someone who looks in from the outside, right, that doesn't have that experience, what are things that people generally get wrong, misunderstand, right? That might be obvious to you, but when you have those conversations, it's like you have gotten this completely wrong.
Yeah. So I'll say like why I think it's attractive to run an exchange. So running a digital asset exchange is perhaps one of the proven ways to run a business that has a high chance of being actually profitable and sustainable. So in basically what I'm trying to say is businesses that make money in crypto are actually exchanges. So it's around trading actually. So if you make money in crypto, you're really running an exchange, running a trading firm, or you may be running a fund, hedge fund, how you call it. This is where the money is being made. Everything else is very difficult. Wallets are difficult. Platforms are difficult. Custody is difficult. Compliance is difficult because it's not transaction-driven business where in a very highly active market, you can actually generate a lot of revenue as well. So there's a big upside actually running an exchange. That's like what I would tell to people, like first one, actually, this is where the money is being made, right? And now the second thing is what I would say is that people underestimate two things around exchanges. First one is just how important liquidity is. You have hundreds and thousands of exchanges. You go there and they're usually dead for two reasons. The first reason, there is no liquidity, so it's a prerequisite. What that means is like if people come to an exchange, has to be alive, has to be active, and you need to be able to execute transactions in size with no problem immediately. So if I come in, I say, I want to do maybe at the beginning, a small trade, $1,000. I click a button, filled. For all of these hundreds or thousands or 10, I don't know how many markets they list. Likewise, if I come and I say, okay, I will put $100,000 and I will do 20x leverage even. So I'm doing $2 million transactions. I click a button, it executes immediately and is done. Right? So this is what means having liquidity. But liquidity is actually, it's part of the infrastructure, it's part of the product. It means you need to have market making firms on the other side who will provide that liquidity and take on that trades, right? When your end clients come to trade. Why do I say this? Because the end clients are not market makers. People who don't wake up one day and say, let me go in the order book and put 10 orders on each side for these 100 markets. This is not what they do. They're the end user. They click a button, they expect a trade immediately with no problems. So this is the first thing. So it's a prerequisite. The second thing is just that exchanges are all about distribution. We can have the most amazing product. We can have interesting mechanics. But if you cannot hit first of all, if you don't understand really who is your target client segment, like whose needs are you filling? And then even more important, how do you even find these people? How do you reach them and tell them, hey, by the way, come here to do it? If you don't crack distribution, you will have a beautiful exchange with a lot of liquidity and no clients. And that exists as well. And the most successful exchanges today in the world, if you look at your Binances, OKXs, I mean, our friends who are here in the neighborhood, or even you look at decentralized exchanges like people talk about Aster, Hyperliquid, or so on. If you look at it, you really see it's great infrastructure, but many people have amazing tech, but then really important, they have liquidity and they are able to communicate that message to the end client. So I would really say is people underestimate liquidity by a lot, how much it costs to make it happen. And the second thing is like they just don't focus on distribution, because I think it's like a Web3 thing. In Web2, people know in Web2 businesses, in normal business, they know like, how do we do marketing? How do we reach clients? And how do we get them on the platform? In crypto, they always think they will come by themselves. I'm like, no, they will not come by themselves.
Yeah.
Maybe, I don't know, because you run a platform as well. I mean, I was, checking your platform as well. And you also, but you are even at the forefront of this whole space, right? Because you're tokenizing real world assets, right? So it's not your crypto token launched with a few market makers and some KOLs, right? It's a serious business. So I don't know how you see it, but that's like, when I was reflecting on a question, I would say like liquidity and distribution.
Would you say, and I will absolutely address your comment or question, I think it's really interesting to pull a little bit on this, but would you say liquidity and or distribution would be like one of the two main reasons why exchanges then fail?
100%. 100%. I think like even I say liquidity is a prerequisite, because even you don't even have clients, right? Because a client can come, they say, this is amazing, this is the right perfect fit for me. And they come there and they realize, wow, but I can buy only for $1,000 and I want to sell, I can't sell. There's nobody to, there's no liquidity to get out. So I think it's like even prerequisite. And I don't know why that happens, because maybe because a lot of people who build crypto exchanges are tech people, so they don't get like trading part, right? Maybe that's the reason. Or maybe let's say like opposite like that. Most of the successful exchanges, when you take a look at the founders, they came from the trading space. CZ was before at the hedge fund and Bloomberg and HFT firm. Hyperliquid, the guys ran their own market making firm. So I think like, let's say like the people who understand liquidity is important and who made it a success, they already came from trading space. They understood that, right? And distribution, I mean, it's like, that's just marketing and then getting the clients on board.
For our listeners that may not be as well versed with the world of trading or crypto exchanges, that may come from a different walk of life, maybe spent a lifelong career in real estate or what have you, right? When you talk about distribution versus liquidity, they're obviously not the same thing, but they're quite interlinked. In short, can you describe what are the two? What's the difference between them?
Yeah. So liquidity is actually like a very technical thing, but people feel it when they do a transaction. So in like plain words, liquidity is ability to execute your transaction. Doesn't matter if it's a buy or sell, that's like your choice. At the size that you want. So if I want to say sell, some tokens that represents equity or bonds or real estate, I can do that in the full amount that I want, and that the transaction happens immediately, right? That I'm not waiting for a year or 6 months or 6 days or whatever. So this is liquidity, what it means. Now, then you can say, well, how can I even recognize liquidity if I'm not a technical person? Where usually when you go to this platform, to these exchanges, they show you this thing called an order book. Order book just shows tells you, well, how much liquidity you have on the buy side and how much liquidity you have on the sell side. This is what order book shows. And if you actually take, then usually they show you this like price levels, right? And then they tell you, well, at this price level, you have this much buy interest or you have this much sell interest, right? And the reason why I say this is key, because people usually look at these platforms and then they see this order book moving and changing and something is happening all the time. And usually I tell people or ask them what do you think? Who is doing that? And then they say, I don't know, maybe people around the world, they're doing that. And I tell them, no, 99.9% of the activity you see in the order books comes from market makers. Why? Because market makers, they provide the liquidity for a living. That's their job. Right?
Yeah.
That's how they make their money, right? That's their role in this whole ecosystem. So liquidity, ability to execute transaction in full at any time and get it completed immediately. How do I see liquidity? It's usually in these order books running around, and market makers are those inside, providing liquidity. So now, liquidity cannot survive if you don't have distribution. If you don't have the end client coming in, doing the trades, right? Market makers provide that liquidity so the clients can trade, and then market makers make their money by providing liquidity, namely on the spread or maybe on the transaction fees. Yeah. So exchange with a lot of liquidity cannot survive on its own, because you need somebody in the end to go and say, I want to buy real estate, or I want to sell it, right? So that's why I think you said it very nicely. You can kind of almost get liquidity on the platform by paying for it. But if you don't get the end clients to come in through distribution to trade, it's not sustainable. So the liquidity only becomes sustainable if the end client comes in, and then the market makers provide that liquidity and they get paid for that, right? They get paid for doing that. So you said it perfectly. It's so interlinked. It's actually very opposite modules, but actually so interlinked, because one needs the other and the other one is sustainable because of the end users.
Yeah, fair. I think every person out there, right? If you've ever been on any investment product, right, where you're trying to either buy or sell, regardless what you're trying to buy and sell, and the user experience is effectively you can't do either, well, you're gonna get frustrated, of course, right?
Yeah.
Especially in 2026, when we live in this sort of on-demand kind of reality, where I can get, especially in a city like Dubai, in a country like UAE, which is everything just works.
Yes.
Shout out to the leaders.
Yes.
Doesn't matter what you want, when you want it. There's infrastructure, because this is really infrastructure, right? That enables that kind of on-demand type experience. This is quite interesting, because as we think about the idea of bringing in this case, real estate, but also other real world assets on chain that have a very different characteristics in terms of an investment or an asset class compared to, spot trading, et cetera, et cetera.
Yes.
Like you don't spot trade real estate, right? Yeah. I'd love to hear your opinion on this. So you think about sort of market making and liquidity when the underlying asset is real estate, which typically is a type of investment that you buy and hold for a longer duration, right? It doesn't have to be 5 years or a decade or whatever, but you certainly don't buy today and sell tomorrow, right? Whereas traditional market makers or market makers in crypto are earning spreads or trading fees with a very high velocity, right? And I don't think anyone has solved this yet, by the way, right? And to be clear, we don't know exactly what the answer is. We have a thesis of what this could look like, but I'd love to hear your raw, unfiltered thoughts. Like, how does one market make when the underlying asset requires you to really hold for some duration of time for you to be able to make any money, right?
Yeah.
Otherwise, one party here is making a serious loss.
Yeah. So you make a great point. Like market makers in traditional space, it's fully automated, computerized. People trade a lot. As I said, the order book is moving around like crazy, a lot of activity. And then you have actually assets, especially, let's say, many times like unique assets. Let's say you're selling a unique watch, right? How can you then imagine that there will be some market maker moving some prices? Because you can say moving what prices is a unique watch. If I have it, there can only be buy, right? Interest, cannot be sell interest, right? I'm holding. And to be honest, this actually players exist. And the easiest way I can describe it to people is that many times, if they ever watched a long time ago when I used to watch TV, there were these shows when they talked about pawn shops. Yeah. So at a pawn shop, you come in and you say, I have this product or something. I have a watch, I have gold, I have painting, I would like to sell it. And then that person who is at the pawn shop, they come and say, hey, okay, let me give you a price. They may bring an expert, very important value. An expert needs to say, I think this is valued if you go to an auction or if you try to sell it in the market. I think this item is worth $100,000. So you need expert to tell you the pricing because you cannot be an expert on all asset classes. But then the person running the pawn shop, he will tell you, look, the expert told me this is worth $100,000. If I bring it into an auction, it will tell me it will cost me $5,000 just to put it on the auction because they need to pay fees. And I'm not even sure that I'll be able to, they say flip it, I'll be able to flip it in a day, but maybe I'll have to hold it for 6 months. Therefore, Sebastian, I can offer you maximum 70,000. Right? So you see how he was behaving like a market maker here, right? So, but it's very different experience than a market maker on a crypto exchange that does billions of dollars of volume every day and a lot of trades, right? So my gut feeling is that for a lot of these new asset classes, you will have an equivalent of what this person that I just described. So you will have an expert, you will have a oracle, we call it oracle in the digital asset space. So it's a price feed coming from an expert who will say, this real estate, it's worth 4 million dirhams. And then somebody will say, okay, look, I can offer you, I cannot be sell it immediately. I'll have fees, need to pay DLD, wherever.
Yeah.
I can offer you now 3.6. If you want to sell it now, I'll offer you 3.6. And now you can say, well, we can fractionalize that so a person can then sell a fraction of a real estate. I don't know how we want to do it. But I think that's how it will happen. So we'll not have these platforms like we have with crypto exchanges, but we'll have expert pricing coming in, people understanding what are the costs to complete this transaction, to sell it later, and also taking account to the risk that you cannot maybe sell it immediately, but maybe you'll hold it for 6 months, 1 year.
Yeah.
And then they will offer you a price. And then it's for you up to take it or leave it.
Very interesting. Very interesting. I think something similar, especially you made one point that's very interesting, which is the concept of effectively inventory risk.
Exactly.
Right?
You say it so professionally. I was a very down to earth.
No, not at all. Not at all. And it's
exactly.
a conversation that it sort of is a double-edged sword in the sense that taking on inventory risk means potentially greater financial upside, right? When you're able to offload, we start having a degree of offtake of that inventory. Certainly if you're able to, like in your comparison, like you can buy in below the current expert valuation or fair market value or whatever term you want to put on it. I believe as an industry, this is one of the sensitivity points, if you will, that we have to figure out how to rightly solve. Right? Obviously, there's going to be some capital available globally that is willing to take that inventory risk, but really, what they're pricing future upside as well as your distribution capabilities. Right? Because if you're responsible for bringing that distribution in to effectively at some point offloading what they're holding, so super interesting. I also think there's a second lane here that may be unique to real estate, I don't know, but which is certainly in real estate, you can effectively identify buy and sell side, let's call it offline, right? And then execute on chain, right? So especially if you're talking about larger positions, if you're holding, if it's a single apartment in Dubai Marina worth 3 million dirhams, it's not that kind of audience, right? But if you're talking about commercial building worth $300 million and someone's holding, 20% of that, they're not that many buyers, right? Relative to smaller fractions. And another point that as an industry we've hammered a lot here in the UAE, which is price accessibility and so on and so forth. But like this concept scales, right? Yeah. The amount of investors that have access to a $300 million commercial building, even if it's leveraged, is quite small. Yes. But the amount of buyers that may have the ability to come in with $1, $2, $3, $4, $5 million is much greater, but still smaller to the 5,000 dirhams, obviously. But even in those sort of hundreds of thousands or multi-million-dollar situations, I think there's a manual process of some sort where you matchmake buyer and seller at that scale and simply just execute on chain, right? Because taking a $5 million or $10 million inventory risk for a number of months or 6 months is a big ask, right? Compared to maybe doing it for 29 seconds on an exchange or whatever that might be. We spoke a little bit earlier about duration, your personal duration in the industry. There's something else that's quite unique about your background, which I want to probe a little at, which is your educational background. Okay. Right? You effectively made the decision quite a long time ago to start an academic route into trading. That was your entry point, right? Why did you do that, right? Backdrop of financial crisis just a few years earlier, I would imagine, prior to you going into doing this. Where did this come from? Like, why did you do this with your life?
Yeah, excellent question. There was a very specific moment in my life at the university. So you actually identified correctly. I studied mathematics. I was always in mathematics, but I was more like the guy who did theory, pure mathematics, And I remember now, memories are coming. I was always the person saying, these guys who do practical stuff, this is really for the ones who can't do the real thing, which is theory, They can't do new theories, I was taught like that. And I remember the day actually, a person came to visit us at the university and talk about his work. Now, people who are in trading and finance will now know who I'm talking about, or what entity I'm talking about. He was the principal or one of the early partners at Renaissance Technologies. Renaissance Technologies, for those who know or don't know, is the most successful quantitative trading hedge funds ever in history. Okay. So this is the best of the best of the best. And this person, who is Croatian like I am, he came to our university and he was talking about what they do in this superstar, trading firm, hedge fund, however you want to call it. And I remember I was listening to him and, and I was just he finished his presentation. I was like, wow, I don't understand what he just said, but this sounds amazing. I didn't even know that you can actually use mathematics. Because he was talking about it in depth, that you can use financial engineering mathematics in finance for a very specific reason, and there's people who do it very successful. So he did this presentation in 2008, just before the whole crisis came in. He came to my university and gave this talk. And I remember I walked up to him, and I said, this is amazing. I want to work at Renaissance Technologies. He looked at me and says, Anton, I kind of told him, do you have a job for me? He says, Anton, you will never get hired here. We get thousands of applications. We have the top of we're the biggest on the planet. You really have to be the best,
That's
if you want to work, Croatian style, Balkan style, And he told me that, and I was like, wow, okay, because I didn't know actually. And later I researched and I realized actually it's a really competitive field to work in this high frequency trading space quantitative trading space at these biggest hedge funds in the world. I actually learned afterwards, after he told me, actually, like it's like you really have to be very, very good. And the reason why I kind of say it is like, I was actually one of the best students at the university in maths, right? So I was like, I felt I'm very good, but later on when I learned it, it was like, yeah, you really have to be like, they hired the, people with a lot of experience, the best of the best, but they never hire finance people.
Mm-hmm.
If you worked at a bank or other hedge fund, they would never hire you. They would only hire you if you came from physics, maths, computer science, and so on. So you didn't have to know anything about finance.
Interesting.
But they would hire you if they saw the potential. But enough about them, But that was actually the exact moment where I said, wow, I didn't even know this actually space exists. And then what I did, I actually decided to also study financial engineering at the university. And so I did kind of both of those actually. And that was actually my motivation. So when I finished university, I said, okay, now I need to get a job at a hedge fund. And then again, I learned like how not easy it is, And I was very lucky kind of after university, I managed to join one of the first projects globally on high frequency trading, because high frequency trading back in this like 2009, 10, it was like still secretive. People knew that more and more trading on financial markets is done computerized. It's not people trading, it's algorithms.
Yeah.
And I joined one of the first projects ever in the world in UK, where basically the goal was to basically look at how does high frequency trading and market making, all of this stuff, how they impact financial markets. How do they make it better or worse? And I joined this project, and I kind of like my journey in this whole space took off there. Long story short, I worked in briefly at UK Treasury as a consultant on high frequency trading, but more kind of like a research policy side.
Got it.
And then
to understand the impact it has on macroeconomic.
Exactly.
Okay.
So it was a huge project. I remember like it was a massive. I did great work at when I was in UK on this like HFT space, but more on research. I kind of like explained what is it that you do there. And I remember it back in the day, my boss, very tough Singaporean lady, she was like, I think it was one of my KPIs, she said, you need to write it, what you learned, and you need to publish it. So I published one of the first, let's say, documents about high frequency trading that explains what's actually happening there. You have to understand, back in the day, a long time ago, like people knew that this is happening, but didn't know what was happening.
Got it.
And I wrote a paper called Overview of High Frequency Trading. For many years, if you type HFT in Google, first was Wikipedia, second one was this paper actually. And that's how UK Treasury found me to join, and kind of work on there. And I remember I joined UK Treasury, didn't know how old I was. I was 24. And, I would go there, and they would meet me and they would like talk, and they realized they hired me, to help them as an expert on regulation and policy. I remember the guys were looking at me,
who's this kid?
And they would say, wow, you're really young. I was like, yeah. So I did that.
Wow,
but again,
impressive.
I really wanted to enter into the industry as a trader. And I met an amazing, super smart guy. He ran one of the biggest hedge funds in Switzerland on this space. And somehow over a period, like on 1 year, I kind of told him, if you need anyone to join. And I think like after a while, like they found an opportunity. He said, hey, come over and you can be a trader, high frequency trader at a hedge fund. I think I was like 24, dream come true for every young man, in finance. And that's for how I went into this journey. And then it's very different, because then you're actually, I was like in the, but you're trading money from clients in the fund, and you're actually deploying them for the purpose of high frequency trading. That's kind of my journey into that. But initially was this guy talking about, and me not understanding what he was saying. I was like, wow, this is awesome. I want to do this.
That's incredible. So you basically then went to Switzerland
with
this hedge fund.
Yes, exactly.
Why did you give up the, trading, educational background, TradFi dream job, hopefully making bank, and then say, oh, this digital assets, which wasn't really even a term fully back then. It was a crypto, basically, right? What? That was a big leap of faith, it looks like.
Yeah, so I can tell you now, it's a very good point. So I joined the hedge fund, and is this like the owner of the hedge fund, like a super smart, brilliant guy, like, a famous guy. And I joined, and almost immediately he starts telling me like, Anton, this hedge fund stuff, this is the past. This is not the future. There's this new thing coming called the blockchain, and it's like a global settlement infrastructure. And you have the first native asset on top of it called Bitcoin, and it all works. And this is the future. It was 2012, And imagine you join a hedge fund. It's like your dream come true. You're like, finally, I'm here. I finally somehow I managed to make it in here. And then you're like listening to a boss. You're like, oh, wow, apparently this is not the future, And he was the one actually who kept on saying, It was not like saying no to this HFT space. You were kind of saying like, hey, no, there is something bigger coming.
Interesting.
And the reason like why it was very interesting for me is because like we were in the foreign exchange markets. It's a very specific market, how it works, like in the background, how things actually happen. So FX is not really like a market, how people think of it. It's actually dominated by the banks. And you either trade against the banks. You have one exchange, but it's microscopic compared to the trading between the banks.
Got it.
So it's very unique, like how you trade and everything. And then we always saw blockchain. Okay, let me take a step back. So in FX, when you trade, the settlement always happens between the banks. So even if you and I are two hedge funds and we trade, we all have our prime brokers, which are our banks actually. And when we do the settlement happens between the banks. And it's all silent. So it's on their balance sheet. This is on their currency, just like magic or fairy tale, settling on their books. And then we always saw blockchain as this global settlement infrastructure where it's not controlled by the banks, but it's controlled by the miners,
Well, that was the dream anyway.
Yeah, that's the dream at least. And you can put assets and then you can trade on them. So this is actually how we saw it. And then basically after like a year and a half, 2 years, this person, I was still living in Geneva. He was in Zurich. He called me, Geneva in autumn, gray, rainy day, you will not see sun for the next 6 months. He calls me and says, Anton, I'm shutting down the whole hedge fund, I'm getting fired, Sorry, I'm firing everyone. I said, wow, this is a horrible start to the day, And then he said, yeah, but, I'm telling you this idea about blockchain. Why don't we do a startup? And he was a lot older than me, a lot of experience, and he did already companies before. He said, yeah, why don't you join? Like, you'll be a co-founder of mine and we'll build a startup in this digital asset space. It was 2013. I said, I really admired this person. And I said, like sometimes you trust someone, like you have to trust in them. And I said, okay, I mean, I kind of imagine like it will be Silicon Valley startups. I didn't know what I was thinking, basically. I was too young, I said, yeah, why not?
You've seen too many movies.
Yeah, I thought, yeah, we're going to raise 100 million now somehow magically, like, I saw it from the, So we went, launched the company in 2013. 6 months later, Mt. Gox blew up, which was back then the biggest crypto exchange on the planet, doing like 95% of all volume, blew up completely. As we were ramping up to, launch strongly and raise money. So that was postponed for like a year,
Wow.
But this was actually the story. He told me, as soon as I joined here, there's this new thing. He decided to actually pursue an opportunity in digital asset space. We launched one of the first companies in crypto in Switzerland. And then kind of it took off, and it was like the typical startup story. You launch a company, you're struggling a lot at the beginning, but somehow the right people, the right capital gets together, and then it took off. That's basically the story.
That's quite the story. It's almost like you serendipitously fell into this by way of this person's side. You know what? Like I have this company and it's the past, and I'm going down this path. That's quite incredible. And also, it's what to me that makes it so incredible is that it was so early on. Yeah. Right. So this person obviously had the financial capability to do these things, but they also had the foresight to say, like, I think we should double down here. Yeah. Like 2013, that's really early.
Yeah.
Right. Very early. Amazing. Very, very cool. So when you do things today, right? You operate today, you build today, you advise today, all the things you do today, with the educational TradFi shift into building, which is arguably probably one of the first, I would say, 50 exchanges ever built, maybe even earlier.
Yeah.
How does that affect, what do you bring with you today that's from that world of TradFi education that you've now translated into how digital assets and exchanges operate today, or should operate today, if you will?
Yeah, so I would say is that I would not even call this experience, but I would just say is like, I know the markets very well, how they function, how they actually operate. So many times especially when we're building something, right? Because this is when key decisions are made. Many times I can tell people like, definitely don't do that. We tried that. This doesn't work. You need to do it. Like, we need to find a different solution. So when I say experience, many times I know how the markets work, so I can tell you what not to do, because you can always change paths, but it can take you on a path where you're really like, oh my God, this is now a big turn to correct something that we kind of maybe, we didn't know it because we don't know intimately like how the markets work, right? So I think that's the first one. The second one is like, I'm very humble about new technology and about new features and about new opportunities, because you only later know that something works, right? And at the beginning, it's always so smart to be like saying, I don't think this will work, or I don't think it's a good idea, or whatever. If you have some thoughts about it, or you can challenge an idea, I do that today. I would rather say, okay, look, I think this is not the best way to do it. And let me show you where we will have challenges. But this is great because we can now test these challenges when we launch our product. And we have kind of already identified where the things, like, like when you create a table, you put the legs, right? So we have 3 legs, but we need to know how to put the 4th. So I think like humbleness towards new ideas, to really say, hey, I'm not sure, maybe it will work or it will not work, but let me tell you where I have identified a few things where we need to strengthen it, right? Or say it doesn't work and then you pivot later on. So I'd say that. And I think like the last thing what I bring is like, I'm super excited about our industry. So even today, like you come to me with something, I'm going, oh my God, this is amazing, you're doing such a great job, I love your platform, I checked it, And I think that's very important, like, because I know a lot of my colleagues, they did their style, they did their exits. Today you cannot talk to them. They're like, even with all their success, they're so jaded. They're like, I don't like crypto. So, but I think this is maybe a matter of character or outlook on life. I still bring that enthusiasm. When people come to me with new idea, I say, awesome, guys, do it. Great stuff, what's happening there. I'm excited. I want to see it, maybe not all ideas, but many of them.
Yeah.
But I think that's so important, like, especially, it, right? When you're building something, it's just problems, it's just challenges. So you have internally, this drive that somebody says, yeah, it's awesome.
Yeah.
Yeah, everything, this meme, have the dog, like the whole house is burning and the dog is like, yeah, it's awesome, So I think like bringing optimism towards the team and
100%.
contributed, I think that's very important.
100%. Yeah, no, I fully agree with that. You have no option, right? Like if you walk into every day thinking, oh, another problem, that's all you do.
Yeah.
You're there to solve stuff that others haven't solved, right? If you don't get excited by that, don't do it, right?
Yeah.
Go do something different with your life, right? So fully agree with that for sure. One thing that you said, I find it quite interesting because it's applicable to, at least in my view, it's applicable to RWA meets crypto, and I'll explain what I mean. You have background in sort of educational and then high frequency and then moved into the early stages, and you can now look at certain business models or product decisions or whatever that might be and say, my view is that might not be the best way. Yeah. I'm not saying definitely you shouldn't do that, but consider X, Y, Z because my experience tells me this. One of the friction points, I guess, that I see is as we talk about all of these new not new, old asset classes really, right? That we're trying to bring into an ecosystem, digital infrastructure and ecosystem that was built for a very different use case originally, right? With an audience that behaves very different and really for a very long period of time wasn't taken very seriously either, right? There was a lot of cowboying around, for lack of words, but a lot of nuclear meltdowns, and we've had them even in recent years. So you don't have to go back to 2013 or 14 to see them, right? Yes. We've had one pretty much every year over the last 5-10 years as well. Is there something today in your experience when you think about bringing RWAs into the world of blockchain effectively and start to trade and invest into these on chain in terms of infrastructure or product related decisions that they're just by default adopting from crypto that they shouldn't, right? Are there changes we should make to the way that we build blockchain based trading for RWAs that have been applied to crypto that shouldn't apply to RWAs?
Yeah. So I would say there are 2 challenges in the RWA space. One is very technical, but then reflects a lot on what's the value proposition. And the second one is on the client base. So I'll answer the first one. So in the earlier days of tokenized RWAs, the products that people were creating were actually not bringing any innovations, in my view, but they were actually creating further costs and uncertainty for the investors. Now I'm going to explain what that means, but it's a bit technical. A few years ago, what a lot of people were doing, they were taking an asset in the real world, let's say a real estate, but the way they brought that asset on chain was something called special purpose vehicles. And I mean, now you know what I'm talking about because you're an expert, but for people who kind of don't understand is basically they created a fund, which has its costs and problems, but this is a traditional finance product. They wrapped the asset with that fund, and then they tokenized the fund. And then they created a token and said, let's go now sell this token. Now, you don't have to be an RWA expert to realize you did not do much here. You just wrapped an asset with this traditional, very heavy, costly thing, and then tokenized that thing. And then how will you bring this asset on chain? Now, why do I actually say this is a problem is because by doing this process, you actually increased friction because there is this traditional fund in the middle. You increased costs, right? Because this thing costs money to actually maintain. And thirdly, you have actually increased uncertainty for the buyer of the token because he first has exposure to the fund, which has its own challenges and problems, and then later only towards us. So, and I will never forget it. Actually, I was like looking into RWA space, working on a couple of projects with my friends back in 2022, and I go to a friend of mine who runs a fairly big family office, like these big ones in Switzerland, and I told him, we'll tokenize US treasuries and then you can buy these tokens and so on. But this is a very smart guy. So he took a look and he told me, I'll never forget it. It's a good friend of mine. So I have to give him, a bit of disclaimer. He said, Anton, we will never buy your garbage tokens, And then he said, let me explain to you why. And then he explained, look, I actually already have world's biggest banks and prime brokers and investment bank at my dial. If I want to buy US treasuries, I will just call them. I already have accounts open with all of them. I'll just buy the US treasuries. So why should I now buy this token that has uncertainty with this fund to actually get the access to the treasuries, which either way I can buy?
Yeah.
And for me, this was a mind-blowing moment because I realized he is right. This is not an innovation. And then I said, but okay, what's then the right step to do it? The right step is to bring this asset directly on chain. Then you don't need all this thing in the intermediaries in the middle. You should actually bring an asset directly on chain. And why you should do that? Because actually then you decrease the cost. There is no this SPVs anymore. But the problem was, and the problem still is today, in many countries around the world, this is not possible, what I just described.
Yeah.
You cannot just put directly shares on chain. What I mean by that is you can put something, but does this give you then the legal certainty that you're the owner of that asset, right? So that was actually, I think, like a thing that for many years people were creating these intermediaries, but they are actually not giving, in my view, but maybe view of my friend as well, they were not giving a lot of that much added value to the end client, which is very important. So this is the first problem. The second problem is that I think pitching real world assets to crypto native crowd is a very difficult sell. It's just a very, very difficult
Elaborate on that.
Yeah. Because this, people in the crypto industry, they expect high volatility, big drawdowns, but they expect a lot of upside fairly fast. So they are looking for that, 50%, 100% per year, 200. I mean, the story is 10x per year. And when you have that kind of expectations, it's very difficult to find alignment when you're offering them a product that's stable in pricing and offers a very good yield, 5 to 10%. But this is just not the right fit. And I know actually a lot of projects, actually, they try to do that. So they would create these tokens, liquidity pools, all these bells and whistles. But then you pitch it to crypto crowd, but crypto crowd were like, but we are chasing meme coins. Like, well, how is it? It's not the fit, right?
Gives me 13x in 3 days.
Exactly.
Yeah.
Exactly. So I don't know how you see about it, but I think like many times, I think today many companies, also like yours, because I checked your platform, website and everything, it targets the right people. But for many years, the RWA crowd was just talking to the wrong end users. That's kind of how I felt.
Yeah, well, there's a lot of interesting stuff to unpack there. I'll take us off track because it's more interesting. One of the core points to hit on there, which is super important, and we could spend hours just talking about this, is how do you structure the holding and the legal ownership of the underlying assets, right? Which is not a problem statement that a single private entity operator can solve for. You simply cannot. You can only rely on the structures that are currently available to you within the jurisdiction that you operate or jurisdictions that you operate within. So obviously here in Dubai, they have taken one step towards making that change, right, at a federal or emirate level, and soon it will likely also be at the federal level. Do you have any thoughts on, obviously we're in the middle of it. We're full steam ahead, clearly, but it sounds like maybe it's too early to launch still, right? Unless you're willing to operate in some sort of in between, doing a little bit of this structure, a little bit of that structure, the underlying structure isn't there to be fully native on chain for all of these assets. But yet, despite that, we're seeing all these companies launching. So do you have any thoughts on this? Like, is it too early?
Yeah. So it always boils down to the fact is like, who is your target client segment and what kind of problems are you solving for them? Because, you know, when you ask me like, where do I see like opportunities or gaps or challenges, how you want to call them, I kind of said, well, the structuring is not done the right way. But maybe for your end client, he cares about access. He cares about deploying capital, right? And he doesn't have access to, like my friend in the family office, right? So maybe that's a value proposition. Or maybe it's about lowering the ticket size. So maybe the structuring is then less important. So it's always important. People need to be mindful, the founders, the project, they need to say, okay, what problem are I solving for which clients, right? And I think then I can point to some success stories. For instance, Xtalks, you know, which is, I think, I don't know where they're based, but it's, I think maybe in Switzerland. It's a company who basically tokenized US equity, brings them on chain, they work together with Kraken, and people then from countries or jurisdictions that don't have easy access to US equities, they can do that through Xtalks, namely through this collaboration with Kraken. Fair point, right? But they still use this special purpose vehicles and this you know, very complicated matters to actually create a product. So it's always important to understand like which problem I'm really nailing there, right? And maybe then this structuring is not so key then, right? But I'm always like the person who told me the big thing is the blockchain. It's like, do we really see where is the breakthrough? What is the big problem? Where is the big innovation? My humble opinion, it's many times easier to go after the bigger problem than after the easier problem, right?
Yeah.
Especially when you're in those early days, right? Where it's kind of demand is just trying to discover itself. But what I just said now comes with these challenges that you need to have when you need to change your laws. I mean, this is the most difficult one.
Yeah, 100% for sure. Structuring definitely is top of the list of conversations we have all the time, right? We're obviously lucky and benefit from the fact that we are here, and there's a reason why Tribe is built in Dubai, from Dubai, for Dubai, but then also for the country and the region and the world is of course the goal. But as a starting point, it's highly beneficial to be able to be where there are these sort of pilot projects happening with new innovative structures, right? I think on the real estate side, based on, if you talk on the, you know, the asset owner side, supply side, if you will, there's a huge amount of excitement and pent-up demand sitting there, wanting to figure out how to get involved. There's a huge amount of education and hand-holding required, rightly so, right? As an industry also, like blockchain, Web3, we got to stop, all of you, we got to stop using hyped up terminology. Let's just use normal language when we talk about what we do. We're creating barriers for ourselves that aren't helpful. Even in the way the products are sometimes built, it's like overly complicated. Like it should be dummy proof basically, and I mean in the absolute non-disrespectful way. But structurally, it's quite evident, right? And I don't even have to. I can use real examples, right? There's been a number of attempts here and in other regions to structure really, really large projects, right? Really, really large RWA or real estate tokenization projects, all of which have collapsed, right? There hasn't been a single global, really large use case that's then copy pasted multiple times over. And to me, that tells me that as an ecosystem, we haven't gotten the structure right yet, and we need to keep testing, right, and trialing. And I would say, in my view, that we are likely going to live with like dual or multi-structure reality for some time, perhaps forever, because to your point, that what are you solving for, right? Your large scale asset managers, your large scale, even sort of the capital allocators at large scale, have a very different expectation on structure, and what matters to them is very different to, you know, a retail investor, for example. We're coming near the end. I wanted to, I guess, hear your thoughts on, we spoke a little bit like structurally what a founder is getting wrong, what is the industry kind of have to focus on, what have you done, etc., in the past, and then kind of where you're at now. But to the extent you're able and willing to, what does 2026, 2027 look like for Anton? Like, where are you focusing on? What's in the pipeline? Any juicy gossip you can share with us that's not public yet?
Speaking hypothetically, you know.
Okay, go ahead.
Speaking hypothetically, I mean, look, exchange space I think is extremely exciting, and especially in the RWA space. I mean, we had this discussion, you know, we were together, for the audience, we were together on a panel, which you, by the way, you were, discussion, let's say, between you and me, which you moderated. I mean, you led it perfectly.
Thank you.
And you kind of asked me, like, where is the opportunity for RWAs, or what's happening, the exciting that I see? And I kind of gave this example, actually, which was very relevant for us here in the region, was when this conflict started here, there was a lot of volatility in certain asset classes, especially in oil, because it obviously, and it impacted us here in the country, in the region, right? And I gave you this example of a colleague of mine, you know, comes from traditional finance, who works in a company who was heavily exposed to oil. And he told me on the weekend, he said, Anton, we hedged our oil position. We bought oil, right? And I asked him, but where did you buy? The markets are closed. And he told me, like, hey, Anton, there is this thing called hyperliquid, you know, and Aster, where they can go and hedge their exposure, right? And it was so, I mean, obviously I knew about hyperliquid, I knew about Aster, but for me it was like, wow, we as a digital asset industry in the RWA space offered a product that nobody else on the planet can offer. There is no other exchange on the planet where you can go and trade oil over the weekend and hedge your exposure. You can go to CME, world's biggest futures market. They don't work over the weekend if you want to trade oil. And it was important for us here in the region and in the country because of the challenges that were happening here and the conflict, right?
Yeah.
And for me, it was like an amazing experience, because I realized, wow, look, there is something that we offer that people need, and where it's a clear kind of value proposition for the RWA space, but obviously in a very specific context, because it's kind of like oil, it's not real estate, but it's something traded globally. So I think in that sense, we are slowly entering into a phase where offering a marketplace, an exchange where you can trade such RWAs in a safe and secure manner with liquidity, I think there will be an opportunity for that. So this is where I'm very excited about, and where I think it will happen, amazing things will happen. But it's just in the early days, and there'll be a convergence. You will have centralized exchanges launching, decentralized exchanges launching, and it will happen what you mentioned actually at the beginning, really like amazing. You said very soon, you're just going to be an investor. And you'll go to a platform, you will sell crypto, you'll have RWAs, you will have traditional finance. You're just an investor. These are not separate asset classes. You're coming under one hood, under one environment. And for us then, as builders and founders, executives in the digital asset space, it's no more digital assets.
Yeah.
It's all coming together.
Yeah. Agreed. This idea of like time accessibility, which is the way I look at it. Yeah. When can I trade is also something that's hasn't really entered the conversation very much in real estate yet either, quite frankly. They're all of the active platform, even in the crowdfunding predecessors, all talk about low price entry points, right? It's price accessibility, but time accessibility and functional visibility of the fact that you can actually invest in that property. We forget, because in Dubai and the UAE specifically, we're very spoiled. Even overseas investors have very easy access, certainly when you talk about off plan, right? But I'm sure there's a great investment opportunity in like Kenya, right? If you find the right one, but it's functionally invisible to like 99.9% of all the people in the world. I wouldn't even know where to start. Like, how do you invest in a villa in Kenya? I don't know. I mean, I might go to Google or ChatGPT or whatever to figure it out. But here, it would take you 2 minutes to find a real estate broker in Dubai. And within 1 day, you'll have a whole list of opportunities. And the day after, you can start deploying capital. Like, it's so easy, right? On a final note, a bit selfishly, you have a lot of expertise. I'd love to hear. When you specifically think about Tribe, right? The reason we're here is we want to build as much as possible in public, right? We want to have conversations like this. We want to be on panels and fireside chats. And and learn, right? Because that's the only way we're gonna make it a success. You think about Tribe, you think about real estate tokenization and sort of the path forward from here with all the knowledge you have and experience you have. What do you think are the near term opportunities, but also the near term to mid-term obstacles, right? Anything we haven't spoken about? I'd love to hear both as sort of a closing note today.
I mean, I will praise you now a lot. So this is the...
Oh, wow.
So
I'm not sure if this is well-deserved, but I'll take it.
yes.
Thank you.
I mean, take it. I mean, first, I mean, in the preparation, I mean, even before the discussion we had a week ago at the conference, I mean, I went to check your website to see what you're doing, the app, and also what you're doing publicly. So I think like you're doing a great job.
Thank you.
I think you're really, really doing a great job. I think also your messaging, your value proposition, at least when I was looking, it was very clear, like to me, like what is it that you offer? And I think you're just doing great, in the long term and midterm, but this is now just like a thought out of the blue.
Good. Go for it.
I think that you will make a massive success story together with a massive partner. And why do I say that? Because there's an opportunity for companies like yours to do that. I mean, I'll just mention you partnering up with MR. I mean, all the doors on the planet are open at that moment. Bingati, I mean, take your pick who you want. I think that can add a lot of value to an organization like yours.
Yeah.
And why do I say it? Because there's an opportunity to do that.
Yeah.
If we were in a country where I would say, Seb, there is nobody here you have to figure this out yourself somehow, how you will even find the flats, I mean, I don't know. But I'm saying this because there's a big opportunity. And this opportunity is just going to become bigger because despite all these challenges, UAE is just going to become stronger. Dubai is just going to become stronger. The leadership is taking an amazing direction for the country. And all of this I mean, you can say developers, but there's many, maybe a fund, a real estate fund, or someone else. They're just going to become bigger and stronger. And you and your organization are already in the right position to partner with somebody who is very strong because you're eye to eye. You are the leader in the tokenization RWA space. Yes, it's early, but they're the leaders maybe in the real estate development. You have the opportunities to talk to a key player on the same level and work together with them. How that then results, maybe they buy you, you buy them out because you become bigger than the real estate. I mean, I don't know, but
sounds dreamy.
Yeah, I think you have an amazing opportunity because there are such big players here, and they would benefit from you a lot more than you will benefit from them, because you're the future and they're the current and the past, and you're the future. That's how I would say it.
That's a nice framing. Yeah. We would like to be the future. So if people want to followers, listeners, current, future ones, they want to follow your journey, RWA Labs journey, where do they find you online?
I'm very active on LinkedIn, but I somehow have to be careful now send me a message. I get hundreds of messages every day. I try to reply to everybody, but as you can imagine, it's like, it's just work, right? So talking about organization and work. So yes, you can reach me on LinkedIn. I actually think it's even easier to contact me if you just write me in one of the posts, because sometimes I write posts on LinkedIn. If you just write me on the post something, I think I will notice it quickly, then go through this whole messages. So somehow contact me on LinkedIn. I think that's the easiest.
Got it. All right. Follow him on LinkedIn. Don't send him messages. He has too many.
Thank you.
If you want to benefit from Anton's expertise, there's tons of content out there. You post, I don't know, daily, twice daily. You're very active, and there's a lot of substance. So that's it. Thanks a lot for coming on. Really appreciate your time and all your invaluable input, expertise, guidance, and hopefully even off camera, we will be able to keep benefiting from it.
Awesome. Thank you for having me on the Block by Block, and you pitched the next guest so strongly that I look forward to the next episode. I will watch it, whoever the next guest is.
Glad to hear it.
Thank you.
Thanks.
Thank you.